We are here, we are here, we are here on this amazing day. Okay everyone, this is Cam Jones FX Daily Analysis. Disclaimer, I am not a professional. Please watch these videos at your own risk. These videos are for entertainment purposes only. Thank you. Friends and family on Discord and Telegram. Families and friends will prosper. Let's pick up for business. Okay everyone, we are marking up EUR GBP. We are going to figure out market structure and what is going on with EUR GBP. So back in 1993, the market started off into a straight push down into an area of support. There's a formation here. I'm going to demonstrate it. Double bottom formation. First leg, second leg, third leg, fourth leg. So once you see that fourth leg of that formation, we'll be looking for the retest. The retest happened right here in this area. Market pushed up, market came back down. That's the retest. From there, after we find double bottoms, most of the time the market does push up. Sometimes it push down. Most of the time double bottoms does push up. But that's exactly what the market did. The market pushed up, created new areas of high highs. Only had one push. So from the bottom of the double bottom, it had one push, two pushes. Sometimes it's three. Most of the time it's three, but this time it's two. Lost momentum. So this is the highest the market has been at this time. And back in 95, we have a few areas of support here. So market wasn't able to hold. There's a pattern here. This is either the evening star or the doji star. It's the red little doji right here. So when we see this, it shows that the market may come down, and then this red candle formed and it closed out below the green one, and that was signs of entry. And if you didn't see it here, you can took it here with this red candle. It actually engulfed all 1, 2 of these candles and even the stuff on the side. So it shows that the market is going to come down. That's exactly what it did. The market came down, broke through the support, retested previous areas of resistance, and the market pushed all the way back down. Full bearish push. The market tried to push back up, ran into an area of resistance. Market pushed back down, created new areas of lows around this time of 97. There's also a formation pattern. I'm going to demonstrate it. We have the double bottom. This forms itself. Here it goes. First leg, second leg, third leg, fourth leg, and the retest happens here. And most of the time when you see the retest at the double bottom, prices push up, but it didn't. This time it pushed down. Broke through support, 2 levels of support, retested something here, and it shot down, created new areas of lower lows. From there we see there's another formation here. It's a double bottom. So when we see double bottoms, market may push up, and it's exactly what it did. I'll demonstrate what I see. This is the first leg, second leg, third leg, fourth leg. This is where the retest happened. The retest came back down to retest previous areas of support. From there, the market touched the support line, created enough momentum to push back up. 1, 2, 3. 3 pushes back up to the top. Actually broke through areas of resistance, new areas of higher highs, trying to come back to previous area higher highs. We have a consolidation area here. So after the breakthrough for 3 pushes, the market just consolidated sideways. So if you would have caught this, all you would have been doing is starting here. You would have sold, you would have bought, we would have sold, and then. So there's a formation here. I didn't see it until I started drawing it out. So I'm going to show you what the market's kind of trying to do. So it's definitely trying to come up, but this right here is. I'm going to separate this. So this is on consolidation area here. So this is the retest area. And this is what I see right here. So this is a double bottom formed. So the market came up to higher highs. And I'm going to cut right down to the bottom. That's the first leg. This is the second leg, that's the third leg, and here comes the fourth leg. After the fourth leg, I told you guys we will be looking for a retest and the market most likely to shoot up. So this is the doji right here, indecisive. The market didn't know what it was going to do, so the market came down. And this is the retest happening. So this is the retest of the double bottom. It didn't retest and shoot. It didn't retest and shot right back up. It actually retested and just consolidated sideways through the whole time from here. So once it consolidated, it created enough momentum to have that push up. I got one push here and two pushes back up to the top of areas of higher highs. That could be new areas of higher highs. Let me look over to the left. Yes, that is new areas higher highs. So far, this is the highest the market has ever been in price so far. There's also a doji here. Excuse me. There's also a pattern here. I'm going to demonstrate what I see. I'm going to okay, this is what I see. So the market pushed up, created new areas of higher highs here. The market wasn't able to break up further, so we get this wick right here shows that the market lost momentum, closed out here. The next candle formed, and it didn't engulf it, but it did come down. So it shows that, okay, price may be losing momentum if we don't have that another chance at a retest of previous areas of higher highs. It probably tried to do it here, but it didn't work. We didn't get the engulfing pattern over the green here, but we did get some type of doji. So we got the push down. Doji shows indecisive. So market came down. It's retesting previous areas, but it's working its way down. Retesting previous areas of resistance. I see a formation of a double bottom here. That was the first leg, second leg, third leg, fourth leg, and here go to retest here, but it broke through our support. So it broke through our support, and let's see where it headed. And then the market headed back down and tried to reach areas of previous areas of lower lows down here, but it shortened itself a little bit, which is fine. So we have an idea where the market is trying to go. Came up to retest back into resistance level here, create enough momentum for it to have a full push down, and had go a formation here, and then that's when the market pushed back up. And the formation is a double bottom, first leg, second leg, third leg, fourth leg. Once we see the formation of double bottom, most likely a retest going to happen. Retest happened, and market pushed right up through the areas of resistance, creating new areas of higher highs. So market is actually returned back to new areas higher highs, and we have to see if the market is going to break up or break down. Also, this whole section right here is basically the market is in some type of consolidation. It's just working sideways. So until the market breaks out fully of this top of my red line or bottom of this red line, then we know the market is going to go down back to areas of lower lows, or try to go back down to lower lows, or break up. If it breaks up, it's going to try to return to previous areas of high highs in this area here. If it breaks this area here, then it'll make new higher highs that the market has ever been in with EUR, GBP, and it'll be working its way up. If so, if not, it'll come right back down. So what we can see is we are in a consolidation phase. Once we got that push up, we would have lost momentum because we would have got out here, sold here, buy here, sold here, buy here, sold here, buy here, sold here. And this is what price action at. Price action is the last active candle. So we have to figure out what is going on in this area. So we do see some type of doji. It is an active candle. The candle did not close out. A doji candle is a candle that is indecisive. We don't know if the market is going to go down to break new levels. We don't know if the market is going to go up to break new levels. So right now it's just stuck right here with this doji. So we have to figure out what's going on. So what we're going to do is we're going to figure out the overall trend. So we do know that we are in a consolidation area. I'm going to erase my red markups. Okay, let's head over to price action again, and let's see if we can figure out what's going on with price action, this active last candle, and also the area that's going on. So we know we broke through areas of lower lows, and it created new areas of higher highs, and it consolidated. And now the market like is coming back down. We got a doji, so there's a chance that the market can come back up, or it can break this area here to come down. So for right now, I'm going to put it as a uptrend. I'm going to grab the lowest low here, and we do know the market rised up to new areas of higher highs. If anything changes, then we'll just adjust our trend line. For right now, this is what we're working with. Next, we're going to figure out our SR lines. SR lines are support and resistance. Support meaning the floor, resisting meaning the roof. And how we set that is we find price action, and we want to look over to the left to see if price action is trying to break anything. And it is. It's trying to break these areas here all the way through. So what we can do is we can just grab this peak right here, and it's perfect lined up to the other side. So price is trying to break this to see if it's going to go up or probably down. So we're going to go back to price action, and we're going to sit here and say, okay, price is going to ride our uptrend. How far would it go? Let's take it to the next peak area, which would be here. Okay. If we had to find an area, so there's a hidden area here as well. I just seen it after I put that. So if you go back to price action, we did choose the area of if the market goes up, it would be here, but truthfully it wouldn't be there. That would be one spot, but truthfully it looked like it would be here. So right here is a hidden area. Now what you can see is now everything looks a lot clearer. Market pushed up, broke through, and you can see how the wicks and everything just lined up right perfectly. Bodies of the candle, wicks are just touching, so it looks clean. So we know we got something going. Let's go on to time frame. Let's see if we can tighten up our SR lines on a lower time frame. So what we're going to do is we're going to do work on a top down analysis in between our red lines, and we are looking for peaks. So there's a peak here, perfect touch here as well. There's something going on here, so I would say there's a peak here. And there's also a peak here. Forex 101, guys, please practice on your SR lines. Very, very, very important when it comes to taking your trades. Practice on the SR lines, very important. Practice on all of it, but definitely practice on the SR lines because SR lines is what you're going to do is when you take the trades is what level you want to take it to, is up or down. And if it's off, you can miss your mark of your TP or overextend your stop loss, which we don't want to do. Okay, so we create our SR lines. So I'm gonna explain to you guys what are we trading. We are trading the. Let me put these lines here. 1 second. Let's change this to blue. Okay, so I'm going to demonstrate what we're trading. We are trading the breakout pattern. For example, if price is moving up in our uptrend, if price is moving up on our uptrend, and let's say we quit at the bottom of a lower low, price will take them staircase jumps, create new areas of high highs. So let's say it reaches our SR line, we will not be taking entry right away. We'll wait until the market breaks through our resistance to come back to retest our resistance line, and then we look for entry to take it up to the next level for our TP. Once again, we will be not taking entry at the SR line. We wait for the market to break it, to come back to retest it, we look for entry here, and then we take it to the next level. Once again, we wait for market to not look for entry here, for it to break our SR line, to come back to return to our SR line, look for entry here to take it up to our next level. Plain and simple. Next, let's head over to back to price action. Let's see if we can figure out what is going on with price here. So we can see that price looks like it's respecting our trend line. So it is an uptrend. My trend line is a little bent. I have some leakage here. I call it leakage. I have a little leakage here. It's fine. I can bend it down and get it a little closer if I wanted to. But I already know what's going on in the market. We all know what's going on in the market. From there, we're going to figure out what's going on with price action. To figure out what's going on with price action, we're going to grab our rectangle. And we're going to place it where the lowest low is at. So look for price action. Place it where the lowest low is at. Is either lower body of the, it could be a lower body of the wick, or it could be the body of a candle. And we're going to just stretch it up a little bit to areas of higher highs. If we need to tighten it up, we'll tighten it up a little later on if we need to. Whatever the market is going to do is going to identify itself here, either this here in this platform, or on a lower time frame. So here we go. The market has identified itself, and let's see what we see. Okay, so I'll explain. The market has came down from areas of higher highs back to areas of lower lows. Right now, see, this shows that it's a consolidation, and I'll explain to you why. So I would have probably seen this before it probably happened, and the only reason why is because of these wicks. So once price came to lower lows, we see this doji long wick down to the bottom, and then market push back up. We see a doji. Oh, it's not even a doji. I don't even know what this is. Let's call it a doji for right now, because it is indecisive. It's not. It lost momentum, whatever it tried to do. So another doji here, and another doji here, and the wicks is what's showing me, okay, you know what? This market is going to put itself in some type of consolidation, and exactly that's what it did. Okay, so the same box I just did here is the same box I just did in an earlier time frame. So I do know that something's going to go happen in that time frame. So I'm going to demonstrate what we see. Market push down lower lows is the formation of a double bottom. This is the first leg. This is the second leg. This is the third leg, and this is the fourth leg. And it reached back up to areas of higher highs, close to our SR line, but our highest high of our orange, our rectangle lines. So right here in this area, maybe a little higher, there should be some type of retest. So we're looking for the market to, let's say if it comes up a little higher, and the market come back down to retest previous areas of support that's here. And then once we get that retest, we'll look for entry, because remember, we trade the breakout pattern. So we're looking for price to break, which it did. This green candle broke, and if you're going down lower time frame, we'll retest, and we'll look for entry to take it up to the next level here. Okay, so if we was looking for, let's say if we did see the pattern, it did the retest, and we're looking for entry. Let me go back, because I feel like I missed something with you guys. So first leg, second leg, third leg, fourth leg, we're looking for the retest. So I don't know when the retest is going to happen. We'll see it. And let's say the retest happened here. Then once we see the retest, most likely, most of the time, the market shoots up for new areas of high highs. So the market will be trying to head back up to previous areas of high highs, which is here, which is an amazing move. Okay. So what we're going to do is we are going to, let's say we seen the fourth, we do see the fourth formation of the double bottom, and let's say the retest happened and we found where to enter at, and let's say we entered right on this red line because price broke through it and then came back to return it, to return to the red line, and let's say we take it up to our next level, which would be our high within our rectangle, or we can grab the SR line, either or just get it right between. Head down the time frame. Let's see if we can tighten up our stop loss. Okay, everyone, this is EUR GBP, and we are looking at 56 pips to the high and 24 pips to the low if we recorded there, which is an amazing trade. But we see that when we went down the time frame, it actually did what we thought it was going to do, and that's reach up to areas of high highs, and it's headed there, you know, for the 56 pips, which is an amazing trade. Let's go back to where we put our rectangle at. So once the market pushed down, we drew a rectangle down there. We waited on that earlier time frame to see what's going to form. It took days to form. Each candle is a day, and then we see double bottom, and then we're looking for the push up. So to figure out what's going to form in this area here, this rectangle, we are going to go to Google. We will type in Forex pattern cheat sheets, Forex pattern cheat sheets, and we'll go to images, and you guys will review the images. You don't have to remember what the name of the patterns are, but there's plenty of patterns that you can see and you probably can remember visualizing. And then from there, you'll just match up what you see on Google to this area here, and once you see the pattern, it could be a single bottom, double top, morning star, evening star, whatever pattern it is. What's other? There's a few more, but whatever pattern shows itself, identifies itself in this rectangle, we take the trade and take it for the move, and that's an amazing trade. Okay, everyone, this is Cam Jones, FX Daily Analysis. Thank you for watching, and thank you for your attention.